in terms of reconciliation, it is going to be the part of the system asset. What it says, select a sample of invoices and recalculate the totals and calculations. What we are doing, we can do in any way. We are talking sometimes, we are what they say, do with respect to sales tax or corrector tax. Is that if we take here into consideration, you have, is it right? We have value added tax. Is it right? We have value added tax of 5%. Or in all products it's not there. Some products you have value added tax, some products you don't have value added. In that is the case, what we will do, we'll take and we'll make a accuracy that yes, value added tax has been taken into consideration only those projects. If some products are not having value added tax, we have to ignore it. For a sample of invoices, confirm the sales price. Agree to the authorized price list. Is that automatically what will happen? The price list and the invoice price should also be same. That will be the same only. Is that when you are going to scan it, definitely it will not have any mismatches. Is it right? Cutoff. You will find cutoff in most of the cases. Is it? Cutoff is nothing but the accounting period. Is it? That the basic thing which we have to understand. Is it? For point number 4. Is it? It is very simple and it is very repetitive. Is it? Cut off accounting period. What we have to do? We have to make sure that what happens as on 31st December every year. Now when you are doing it every year, you have to know, you have to verify. Is it right? You have what transactions before, is it right? And transactions after. You have to know what dates. Okay, you just to make sure that they have not mismatched the dates. Is it right? Transaction events are recorded in the correct accounting period. Select a sample of pre and post year. Pre means before and post means after. Goods delivery notes. And whether it has been recorded in the correct period of sales. Is that it has been recorded in the correct? Means that's very important. Cut off. Is that these are the basics and these are the easiest way of getting the things done. Is it right? Now, classification of transactions. Is that transactions are even recorded in the proper account. Is that that's what it says. Most of the time what will happen, they will say that, is that most of the time what will happen, they are putting the things whether it is a capital nature or it is in revenue nature. Is it right? They will say, see what happens, you will have sales returns. Is it right? You will have purchase returns. Is it right? You have sales returns, you have purchase returns. You have to classify correctly. It means, is that we should not make any mismatch of that. Agree for a sample of invoices that they have correctly recorded within the revenue and selected within the revenue of the financial statement. Means whenever we are talking in terms of what? Whenever they are talking in terms of sales, revenue should be shown in the revenue only. Is it right? That as simple as that. I will put like this, sales. Is it right? It is otherwise called as a revenue. Fine. Now, from this you will, what are the various other things you will have? You will have sales discounts. Is that right? You will have sales discounts. You will have sales returns. Is that you will have sales discount? Means this classification has been done as per the requirement. What is the rule of nominal account? Anyone is there? Anyone can say what is the rule of nominal account? I will be very happy to listen. If yes or no, don't waste time. Nominal account rule. If you are taking strategy, the next semester strategy SBR, you should know these rules. Debit the expenses, good. Fine, that's great, alhamdulillah. Is it right? Exceptionally, I put that heart, okay? Credit all incomes and gains. Okay? Exceptionally. Fine. Is it? Debit all expenses and losses. Credit all incomes and gains. Whenever we are talking about the sales, okay, whenever we talk about the revenue, is it right? Revenue is considered as a income. Is it right? Revenue, income, is it right? Revenue will be credited. That's the reason. See, if I don't tell this, you will not, if you don't have the nominal account concept, you will not get the things what is nominal account. Is it right? Means whenever we are classifying the sales, we have to classify the sales as per the nominal account only. Fine. This is the point number 5. Fine. Next. No, I will not take one. Reconciliation is also not there. Supplier statements, no. Where we have done this? Tell me fast. Which lecture we have done this? Review engagements. Where we have done? Fine. Okay. Now, what is the purpose? Again, I am writing here. Again, dates. I will always write the dates for each and every question. Okay, so that I can trace it out. Explain the purpose of review engagements and how does it differ from external audit. Okay. In the review engagement, see, external audit is completely for the financial statements. Is it right? External audit, see, what it says, Sky Mode new finance director. First read the question. Explain the purpose of review engagements and how it is different from the external audit. Is it? Only 2 marks. Okay, only 2 marks. They have written so much. Is it right? We should also make specific. Is it right? They are talking about with explanation. Sky Mode new finance director has read about review engagements and is interested in the possibility of a Maple company undertaking this in the future. However, she is unsure about these engagements differ from an external audit. he is not having any clarification. Is it right? People will say that review engagements is part of external audit. No, review engagements are independent review. Is it right? If as we have discussed, if a auditor is joining as a financial controller, if that is the case, then whatever the job done as a audit manager, audit or as an auditor, that work has to be reviewed by a independent reviewer. Is it right? And how much assurance would be gained from this type of engagement? What are the review? What is the basic concept of review? It will not change. Okay. See, 2 marks, 3 marks questions are theoretical questions. Understand what? 2 marks, 3 marks questions are theoretical questions. See, you have to understand the psychology of the question paper. As simple as that. 2 marks, 3 marks, we don't have any margin to experiment. Okay. Scenario based, we have the margin to experiment. Is it right? Review engagements are often taken as a alternative and audit. What it says, it involves a practitioner, it also an auditor, is that reviewing financial data. Is that means you have any doubt as such. Is it right? If you have any doubt, then you will go for a review. Second opinion, very simple. Review engagements is nothing but in simple words, it is a second opinion. Now you will understand in very clear terms. In clear terms, a second review, you are not convinced, definitely you will go for a review. Is it right? Review are often undertaken as an alternative. Fine. It involves reviewing financial data such as 6 monthly figures. Is that this involves the practitioner undertaking the procedures whether anything has come to their attention, which comes to the knowledge that it is not in accordance with the financial reporting framework. Very simple. Second opinion. Okay. Second, you remember review engagements are second opinion. If what it is a part of the financial statements, is that financial data, it is, and it is taken by the practitioner only. Okay, keep it in mind, it is taken by the practitioner only. And when we make it a point that we have something which we have to have a second opinion, anything has come to the attention which causes the practitioner to believe that the financial statements is not, data is not in accordance with the reporting. See the thing, they have made very, very clearly. Is that we will talk about the financial statements. Is it right? This is going to be done by whom? This is done by the external audit. Is it right? Now, when you are talking, they are not using financial statements. They are talking in terms of what? Financial data. This is going to be done by a review partner. Means what the review engagement is not with respect to entire financial statements. Review engagement is only with reference to a particular segment, a particular component or a particular part of the financial statement. That is the reason they say it is a financial data. A review engagement differs from external audit. Okay, it differs from in the procedures undertaken, not nearly as comprehensive as those of an audit. If they are not comprehensive. Is it right? Don't think that. See, this is comprehensive. Is it? This is comprehensive is nothing but the total. This is what? This is very, very specific. Is it? This is very, very specific. Is it? I will take up this again. Before revision, I will take up this again. Okay, very specifically. Is that? It talks of, in addition, the practitioner does not need to comply with IAS standards. Here IAS standard is needed. Is it right? Here ISA is not needed. Fine. Now you can understand the difference between. See, you should make it a point that understand the difference between a external auditor and external audit and reviewing it. Reviewing where opinion is being provided that the practitioner has sufficient evidence to be satisfied that subject matter is plausible. In case of negative assurance, whereby the practitioner confirms that nothing has come to the attention. Is it right? When the subject matter contains material misstatement. What the review engagement, how they will give the opinion. Opinion is being provided. Is it right? They will gather the efficiency and they say that they have the, in case of negative opinion, nothing has to be come into mind. Is that I don't know anything. I don't know. People will say, no, I don't know. I don't know means it's your wish. I don't know anything. They reply like this, I don't know. I don't know means they don't want to give positive opinion. Got my point? They don't wish to say yes. When you don't want to say yes, and you don't want to say no also, preferably you want to say no rather than yes. Understand why? Preferably you want to say no rather than yes. Then what you say, I don't know. Is that here also what happens? They will make it a point that nothing has come to your mind. Is that remember this? If you come across something like this, it is nothing but a negative assurance. It comes as nothing has come to your mind. Fine. Whatever I did, in that nothing has. Maybe if you explore more, you will get more. Is it right? Then it is called as it contains what? It contains material mistake. Find difference between an external audit and the internal audit. External audit, financial statements. External audit, financial statement. Review engagement, financial data. External audit, it talks about what? It has a comprehensive, is it right? Complete financial statement. Review, very specific. External audit, they follow ISA. Review engagements, they don't follow ISA. Is it? What are the levels of assurance? Is it? What are the levels of assurance? Every question, make it a point. I will put the date. That is where that is the way I will explain so that you should know. Level of assurance. What is a high but not absolute assurance is provided. This is otherwise called as a reasonable assurance. Keep this in mind. Whenever we are talking about the quizzes, now what I will do, I will divide the question under different parts. 2 marks, 3 marks, 5 marks, like that. Is that 2 marks are concepts, 5 marks are scenario based. Is that what it says? What the external auditor provide? They provide a reasonable assurance that the financial statements are fairly in material aspects, or they will say it is true and fair from the material misstatements. Got my point? I think there should be something should be there. It is not reflecting. I will check. Okay. Now you are understanding how the questions has to be answered. We covered this. I think we have done somewhere in lecture 6. Is it right? Audit planning and audit risk. Is it right? It is related to lecture 6. Fine. See the things. This type of question will see now very this they will ask what is the audit risk and what is the auditor response to each risk. Is it right? What is the auditor's response? See, corporate governance, ethical threats, is it right? External audit, internal audit. These questions they will not leave a single concept as such. That is the challenge with respect to ACCA. Well, first what they are asking, describe 6 audit risk and 6 audit response. What is the risk and what response is nothing but how you have to tackle that situation to make it the minimum level. Okay, to make it to the minimum level. Now, what is the audit risk? Tell me fast.
Inherent risk.
Pardon?
Control risk. Detection.
Little bit loud.
Control risk.
Inherent risk.
Control.
Inherent risk. You have control risk and
Detection.
you have
Detection.
detection risk. Detection risk. And the detection risk, what is the two things?
Sampling and then
Loudly, I'm not. Voice is not audible to me. What is the detection risk?
Sampling risk and
sampling risk and non-sampling.
Good. Sampling risk and non-sampling risk. Is it right? If you multiply this, you will get what? You will get audit risk. Okay? Now, there are two questions are there. Is there prevention and detection of fraud? Fine. We will do both the things. Nothing will happen, inshallah. Okay? We will do both the things. You are an audit supervisor of Maple and Company and currently planning to audit of existing clients. Is it Skymore Science Company? Is it whose year ended is what? Whose year ended is 30th April 250. Skymore is a pharmaceutical company. See, know the entity. Is it right? That's what it says. You have to know the entity, how we know the environment. Is it right? Know the entity. You think from pharmaceutical in the company point of view only. Okay, pharmaceutical. That is the reason they mention you which type of company it is, which type of industry it is. Is it right? Which manufactures and supplies of wide range of medical supplies. Okay, we have to be very careful with respect to medical supplies. The draft financial statements shows the revenue is how much? 35.6 and profit before taxes is how much? 5.9. Is it right? Profit before taxes is how much? Very important. Is it right? See, now you can make it a point. We have done something. Performance materiality. Is it right? Performance materiality. In performance materiality, you have something with respect to revenue and something profit before tax. You know what is the percentage here? Just guess. Take a guess, nothing will happen.
5%.
Is it right? If you take revenue, profit before tax, it is 5%. If it is taking revenue, 1 to 2%. Is it right? This is called as performance materiality. Now you see the thing. When they are giving you this type of questions with this type of information, immediately, there is no second thought. We should say that it is related to performance materiality. 100%. Is it right? Fine. We will take that into consideration. What we are talking in terms of the sales and revenue. Skymo previous finance director left the company. Fine, good. And it was discovered that he has been claiming fraudulent expenses, though very, very serious case. Is it right? From the company for significant period of time. A new finance director has appointed in January 2015 who was previously a financial controller of the bank. This is the audit risk. Is it right? He is working in the bank. Is it right? He is working in the bank and he is not now appointed for whom? It is now appointed for a pharmaceutical company. This is a audit risk. This is the audit risk. Understand? Means definitely you are working for a bank. Definitely it will take time to adjust and understand about the terms and conditions and working environment of the pharmaceutical company. Fine. Next, during the Sky mode, they have spent how much? One for developing new product. The products are at the different stage of development, and the financial statement shows that full amount within the intangible assets. See, you have invested how much? 1.8 million. Different stages, still not successful. Is it right? Not successful. Different. Is it right? Now, what will happen? Definitely, this is the audit risk. Is it right? This is the audit risk. Is it right? Is that inherent risk? Whether we can encash 1.8 million amount which have been spent. Is it right? Now we will do this also, and in order to fund this development, what they have done? They have borrowed how much? 2 million from the bank. For how many years? 10 years. The bank has attached that. See, this is the audit risk. The bank has attached a minimum profit targets for the. What is the risk? Audit risk. Audit risk is they have attached the conditions. Is it right? They have attached the condition that we will give the loan, but if you are giving the loan, you have to get this much profits, not sales. Is it right? The new finance director informed the audit partner that since the year ended, there has been a increased number of sales returns. Understand what I say? That this is the audit risk. Is it right? This is the audit risk. What happens? You are selling the product, people are returning back the goods. Is it right? People are returning. First you will sell the products, expecting. Is that people will buy the product. But the moment they find it some defective things, they will give it back. Is it right? For the month of May, the 5 million goods has been returned, sold in April. Is it right? Maple also attended year inventory count. The auditor present raised concern during the count that there were movement of goods in and out of warehouse. Is it right? And this process didn't seem self-controlled. See, whenever there is a inventory count, is it right? Whenever there is a inventory count, this is what the inventory count instruction says. Whenever there is a inventory count, what happens? They should not have no movement. Is it right? No movement of inventory. Is it right? No movement of inventory. We cannot say no. Understand my point? We cannot say no. What is the alternative we can put? We can say that, is it right? Or we can say that if movement, is it right? If movement, is it right? If there is a movement, the inventory should be should be flagged off. Is that fine? You have the inventory, fine. There are things, is that you should know, yes, this inventory has been counted, this inventory is not counted. You should have some identification process. Is that you should not stop the things first. You should never say no. You should never say, the third one is, you cannot say that risk can be made zero. These are the basic things. The role of the auditor is to come up with some alternatives. Is that to come up with alternatives? That is what it says. We will see this. During the year, a review of plant and machinery of the factory undertaken, and there is a surplus plant was sold, resulting a profit on disposal of for how much? 2,100. Again, is it right? You should make it a what is the risk, whether you have sold it. You have sold it with the permission of the board of directors. Is it that you have made correct valuation is there or not? Is that this is the audit, you have done correct valuation or not that? You have to go through these points as such. Is it right? Now, what they are asking us, what the responsibility with respect to prevention and detection of error, fraud and error. Rarely they will ask you this. If you take all the question papers for the last 15 years, I am talking about since 2007, maybe one or two question papers they have given this question, fraud and error. Is it right? One or two. They have to conduct what? See, when you are talking about, see the things. They will not mention you, they will not mention us the standards. I told you, we have to mention the standard. That is the reason I told you we have to memorize. The moment you write this ISA 240, responsible relating to fraud and error in the financial statements, automatically 90% you will be on the right track. Is that MAPIL must conduct the audit in accordance with the ISA 240 and responsible for obtaining reasonable assurance that the financial statements are free from material misstatements. The first one, responsibility. The second one, in order to fulfill responsibility, MAPIL required to identify and assess the risk of material misstatements. Is a material misstatement. You have to identify the risk. Is it right? You have to identify and assess the risk. That's what they say. You have to identify. You have to identify and assess the risk. If risk is less, is it right? If risk is less, if risk is high, you can understand what I want to say. If it is risk is less, what you will do? You will do the restrictive. You do restricted substantive procedures. If the risk is high, you will do detailed substantive procedures. Fine? This is what the point says. Now you can understand. The moment I am going through the question, I will revise whatever is done related to that point. Okay, related to that point, it will be there, so that you will have a complete way of understanding. They need to obtain, is it all the time, sufficient appropriate audit evidence. With what? With respect to risk of material misstatements. Due to through designing, implementing, is it appropriate responses. You have to as a what will do. You will design, you will implement, you will make your own plan as such. Is that the MAPIL company, the client must respond appropriately to the fraud and any fraud related factors. Is that the firm should respond? That's very important. Is it right? Next, while obtaining assurance, is it right? MAPIL responsible for maintaining professional skepticism. See, now if you take this into consideration, we are covering every other, we don't restrict yourself that I am doing only one lecture. If you are doing lecture 6, lecture 5 is important, lecture 2 is important, lecture 1 is important. Is it? Somewhere we are talking about the ethic, is it right? Ethical, you are talking about ethics, is it? Professional skepticism. Throughout the audit, and they have to maintain a potential for management override the controls. You have to make sure that how the management is involved in this process. Recognizing the fact that the procedures are effective in terms of detection of the error and detection of the fraud. Means always what the auditor has to maintain, the auditor has to maintain professional skepticism, is that while obtaining reasonable assurance, the auditor has to maintain professional skepticism throughout the audit, and any ineffective internal controls are there. If there are any ineffective internal controls which will lead to detection of fraud or detection of an error. Is it right? Now, to ensure that the whole engagement is aware, the whole engagement team, it is not the only the role of the senior auditor. Is it right? What it says that every other person in the team is responsible. Audit team. Got my point? There is no junior, there is no senior. Even sometimes juniors will come with good ideas, good points. Is it right? That ensure that the whole team is aware of the risk and responsibilities. What it says, ISA appears that the discussion is held within the, first you have to have a discussion within the team. People who are not present in the team, you have to inform them. Okay? If for members not present at the meeting, SkyMore audit engagement team should determine that which matters should be communicated to them. Got my point? In some cases, there will be some absence of team members. Is it right? The most important thing is whenever you are working as a team, if somebody is not there, the team has to inform the people who are not present during the discussions. What are I can say very clearly what are the 5 different points. Is it right? 1, 2, 3, 4 and 5. First you have to follow the ISA standard. Is it right? Related to fraud in the financial statement. Second one, what you have to do? You have to identify and assess the risk. Okay. Second one, what you have to do? You have to identify and assess the risk. Third one, you have to obtain reasonable, appropriate audit evidence. Try to get reasonable, appropriate audit evidence. Is that? And in this process, if there are anything is there, the client must respond. Is that the client? This is the third one. Fourth one is what if they make it, they have to always make it a point that there should be professional skepticism. Yes, you should always make it a point that you should not compromise on the values. Is it? In order to detect the errors and fraud. The last one, what it says, if any member of the audit team is not present, you have to inform to that team member about the discussions, what happened, and you have to communicate that to the person who is not present during the team discussion. Fine? Is it okay? This is where we are talking in terms of audit. Now, coming back to this, is it what is the audit risk? Is it right? What is the audit risk? They have asked 6, they made it more. Is it right? We will complete this and we will stop. What is the risk? Is it? The risk is the previous financial director has been left in the month of December, and there is a serious charges of commitment of fraud and expenses claim. This is right, what it says. See the thing. This is point number. Is it right? This is point number 1. Fine. 1 minute. This is point number 1. Skymore previous director left the company in December, and it was discovered that he has been claiming fraudulent expenses for a significant period of time. This is the audit risk. Is it right? What is the audit response? Is that audit risk? Senior previous director left the December. It was that he has been claiming fraud, committing fraud and expenses claim. What you have to do? See, you have to give some response. Is that this is the why the always discuss with the new finance director. The auditor has to discuss with the new finance director, the auditor, and what procedures should be identified to any further frauds by the You should not come to a conclusion that yes, he has been. You have to discuss, and you have to again reinitiate the process. Is that subject to the condition that we got some reasonable, sufficient, appropriate evidence. Fine. That is the first risk. Second one, the risk there is a risk that he may undertaken other fraudulent transaction. Maybe he has done some more things. Is that we don't know. That is the risk. Is that if he can do something one, he can do something more than one also. This would need to be written off in the statement of profit and loss account. If you have if there is any fraudulent things, it is a loss. When it is a loss, you have to debit the profit and loss account. Fine? You should not carry that. If there are anything uncovered, the financial statements could incur errors. Got my point? Anything fraudulent happened, definitely it is a loss. Audit risk, is it right? It is a risk that yes, we are going to have some losses. What is the response? The team should maintain their professional skepticism and alert to the risk of there should not be further fraud. Whatever happened is happened. We should not go back and say that this has been happened. Fine. But at least from now onwards, we should be in a position to be more alert and more careful. Is it? Now, the new financial director is appointed when they have appointed. See, we have not taken this one. Is it right? He has been appointed when he has been appointed when. He has been appointed when he has been appointed. Where I missed. He has been appointed in January. Okay, he has been appointed in January 2015, and when the financial statements are ending on 30th of April. He doesn't have that much time also. Just imagine. It is an audit risk. Is it right? It is an audit risk. You are appointing in the month of January, mid of January, and you have to submit your accounts by the late of April. Is it right? February, March, April, 3 months, 15 days. Is it right? That is the audit risk. Fine. The new finance director has been appointed when they have been appointed. Is it? They have been appointed on January 15 and was previously a financial controller of the bank. Again, the audit risk. Is it right? You can divide it into two parts. Nothing will happen. Don't worry about that. Is it right? You divide this as a one part. Is it right? You divide it as another part. Skymore is a pharmaceutical company which is very different to the bank. There is a risk that the finance director is not having the sufficiently competent to prepare you are preparing a bank account and you are talking in terms of shifting it to the pharmaceutical company, and when you are shifting it to pharmaceutical companies, already 31st December is over, is it right? If it is there, and you, sorry, already 9 months are over, is it right? You are talking in terms of January, 15 February, March, April, 3 months, 15 days. Is that within 3 months, 15 days, you have to understand the entity, you have to understand the people, you have to understand the transactions. There is a audit risk. Is it right? What is the audit response? During the audit, you have to continue the audit. You should not stop it. Fine. But what you have to do, careful attention should be applied to any changes, any particular judgment decisions made by the finance director. Means you cannot say no. See, that is the reason that whenever you are studying the things in audit, you will never say no. You have to come up with some solutions. Is it? You always have to come up with some solution. The solution should be more realistic and more genuinely. Is it right? Means whatever is happening, that the careful attention has to be paid, and any policy changes, is it right, with respect to the judgment should be made by, should have been reviewed by the finance director. Is that during the audit, careful attention should be applied to any changes in the policy. Means what happens? That this is what it says. Is it right? You are joining. Is it right? You are joining on 15th of January. Is it right? You have to submit on 30th of April. Is it right? If any changes are there, definitely it will have impact. Is it right? It will change the entire picture of the financial statements as such. Is it? That has to be taken into consideration. Point number 4. Is it right? During the audit, how much they have spent? 1.8 million. See, is it right? During that they have spent 1. There are different stages of in the different stages, and total income has been capitalized as tangible asset. We have not seen this one. Okay, we didn't see this one, that they have capitalized. Where it has been then? Yeah, is it? When they say that, is it right? When they say that this amount within the intangible assets, is that during the Skymore spent 1.8 million. The projects are different stages. They have been within intangible assets. Okay, intangible assets means they are capitalizing the assets. Fine. I will not ask you the standard, but if you know the standard, it makes more interesting. Is it right? However, here it has been written. Is it right? Sorry. Is it? Here it has been written IS 38, intangible assets. See, these things will add marks to your total marks. Is it? However, in order to you should know the conditions of capitalization as per intangible assets. Is it right? What is the condition? Just for your information. Is it right? Just for your information, if it is a research, is it right? If it is a research expenses, it has to be debited. It has to be shown in the profit and loss account as a expense. Is that? Or if it is a development, is it right? If it is research is where are different. Development means the product is what? The product is successful. If the product is successful, the expenses, is it right? The expenses should be capitalized. That should be capitalized and shown it in the statement of financial position. This much in detail we have to understand how the things will work. A breakdown of, see what they say, a breakdown of the expenditure should be reviewed. Is it right? A break of the, and only which are going to be capitalized, that has to be capitalized, and which are going to be expensed, they have to be expensed. This is going to be in the income statement, and this is going to be in the statement of financial position. You have to divide what? You have to classify how you have spent 1.8 million. Is it right? The Skymore has borrowed. How much they have borrowed? 2 million from the bank, 10-year loan. The loan needs to be correctly between how much is the current liability and how much is the non-current liability. Means you have to know when they are saying what is the current liability and non-current liability, they want to know the installment amount. Is that they want to know the installment amount every month. Whatever happening during the year, it will be current liabilities. Whatever happens beyond 1 year, it is non-current liabilities. Is that this is what it says? Is that during the audit plan, the team would need to confirm how the loan has been financed, received. They have to split between the current and non-current liabilities in order to have a compliance with the rules and standards. Is that this is point number 5. Point number 6 is that the level of debt is increased. Is that we are taking the loan amount will increase. Is that the loan amount will increase and automatically what will happen? The leverage will also increases. Debt divided by debt plus equity or debt divided by equity. Is it right? Ratio analysis. Is that this is the risk that there is a risk that this firm has omitted from statement of profit or loss with respect to what? With respect to the finance cost. Means you should make it a point whether you are accounting the finance cost as an expense in the income statement. The finance cost should be recalculated. Again, you make a recalculation whether they have done it right or wrong. Is it right? With respect to what? With respect to interest rates, with respect to the bank statements, automatically what will happen? You are getting the confirmation also. Is it right? What you are doing? We are talking on terms of recalculation. Is it right? We are talking recalculation. We are talking in terms of confirmation. See, now you see the thing. Once you are writing one question, you will have a multiple facets to this. Multiple pictures will be reflected in that. Is it right? We are not only just talking about one specific one. There should be, whenever you are doing this, what it says, they say that you have to make recalculations and you have to make, where is that? You have to make confirmation. The finance directors should recalculate the increase, what is the agreed on the loan documentation for the confirmation of the interest rates and with respect to the cash book and bank book. He has to know whether there is a recalculation is right. This is the audit risk, is it right? What will happen? If you are having more loans, is it right? Maybe you will not reflect the rate of amount of interest paid, is it right? You will capitalize it or you will not capitalize it. Is that you have to expense it, but not mistakenly, intentionally, some clients will make it a capitalization. Is it right? Review the calculations. COVID, nothing but the attachments. Is it right? Whenever you take the loan, something has to be given as a guarantee. Is it? That concept is not covenant. Prepared by the Skymore, and we just make it assured that is there any defaults are there or have been occurred. Means you have taken the loan or you paying it on the correct time or such. Is that right? What it says, this is that now you can understand what is the audit risk and how it is going to be. If the company does not have sufficient cash flow, is that immediately if there is no sufficient cash flow to meet the requirement, what will happen? There will be always, see, whenever you come across with a concept of a cash flow, is it right? I am giving you a hint. Whenever you come across a concept of a cash flow, you will come across a concept called as a going concern. This I am telling you right now, and this is going to be there till the end of the thing. Whenever you are having the risk associated with the cash flow, it means there is a question mark on the continuation of the business. Understand point? that in addition there is a risk of manipulation of the profit. Is it right? We can, they can, anybody they want wish to do, they can do. What is the response you have to do? The team should maintain. It is not one person, is it right? Because when you are talking about the things, you are talking about the going concern. Going concern means it or comes into consideration all the different elements. Then one person is not responsible. The team is responsible with professional skepticism that nothing has been overstated in the profit and loss account. Got over it? Now, I'm just working out that. Is it? There will be a significant number of sales returns. Is it right? You got lot of sales returns. And they should be removed from the revenue. What happened? We have the sales minus sales returns. Is it right? This you have done in financial statement. What you will get? You will get net sales. Is it? You have to make sure that it has been shown as a net sales. And what are the returns we have received before and what are the returns we have received after. That the revenue has been reversed and the inventory included in the year-end ledgers. Year-end ledgers means you have to be very clear about the cutoff. If the sales returns have not been correctly recorded, definitely you are showing revenue as on a higher side. What is the response the auditor has to do? The auditor has to, in addition, the reason why there is a increased sales, immediately you have to discuss with the management. What have been done to increase the sales? Why the sales has been aggressively went up? This will help to have identifying the underlying issues with respect to the value of realizable value. Is it? Now what will happen? See the thing. Here sales will increase. Is it right? Sales will increase. Automatically what will happen? Receivables will increase. Is it right? Receivables will increase. Now when you are talking about the sales is increasing, we will have lot of sales returns. Is it right? Lot of returns are there. When lot of returns are there, automatically receivables will decrease. Receivables will decrease, cash will also decrease. You have to discuss with the management what is the reason for increase in sales. Is it? Point number 9. You have to make year-end inventory. There is a movement, is it? There is a movement of inventory of goods. During the final audit, is it? This much is more important. The goods received notes and good dispatch notes during the internal audit count should be reviewed, followed by through the inventory count procedures. When there is a movement, is it right? When there is a movement, what happens? You will have goods received note. From where you will get this? You will get it from purchases. You will have goods delivery note. From where you will get? You get from sales. Is it right? You have to properly review it. Is it? Surplus plant, they have sold it. Fine, okay. They have sold the surplus plant. For how much? Disposal of how much? 210. Is it right? As there is a minimum profit loan convenient, there is a risk that this profit on disposal may not have been correctly calculated. Means want to know. Is it right? You want to know whether you have done reasonable, appropriate, fair value. Against that, we should not use, but there is a fair value. What the auditor will do? Auditor will recalculate the profit. Is it right? And they will agree with the supporting documentation that the valuation has been done properly or not. Last one, is it right? Last one. In addition, there is a profits and losses on disposal of the losses on disposal are indication what? Indication of a depreciation policy. Means when we are talking about the valuation, is it right? When you are talking about the valuation, depreciation is part of that. You have to discuss with the management that depreciation policy. Only this much. You are not talking about detail. What is the audit response? Is it right? The auditor response is, as an auditor, what you will do? You will discuss with the management what is the depreciation policy and whether the same principles has been applied or not. Is it right? This is the things how we are. See, it is still in the beginning. Okay, still it is the first time we are doing this. Again, the moment we are doing second time, third time, fourth time, the more we solve question papers, the more we get the clarity on this. Okay, this is the first. I don't want to keep anything in the ending. In the ending, just I will take revision as much as possible. Is it right? By this month or by maximum by next month, first week, we will complete the concepts. Okay, then we start making the whatever we have studied, we are going to take it as a revision. Is it right? This much, these things we have done. Is it right? This much we have done here. Is it right? Put the date here. It is what? It is 19th. I am not closing this question paper. Okay? I will keep this question paper as it is intact. And somewhere down the line, is it right? Somewhere down the line, again I will take up this, the things which we have not done. Is it right? Deficiencies, controls, whatever we have not done. Again, we will complete those things which we have not completed by putting the date, so that we will be very clear that these things has been done during this period as such. Can I stop here?
Assalamu alaikum. See, as a friend, it's my duty to support